Let's talk about my sniper shot day trading strategy, and more specifically, understanding the risk versus reward component of it, because yes, that is a very important component to any strategy. As a little background, I do live trade videos on another playlist where I'm recording myself trading live, and sometimes I'll get questions or comments that reveal these people don't quite understand all the different areas of risk management, and that's okay. I can understand how they might overlook it, especially when they see certain results, as I'll show you here. But I just want to make sure that everybody has an understanding that risk versus reward is not isolated in one area. There are definitely a couple areas and ways you can go about it. So to start off, I want to show you some results that came about from one of my live trade videos, and just I want you to formulate some thoughts about it. So these were my results from a particular day, and over here you can see the profits and losses of each of those individual trades. And you're looking and maybe saying, geez, that's a lot of green, Clay, but that loss is sort of big. In fact, borderline awkward how big that loss was compared to your wins. Now, I totally understand this thought process. You're seeing all these winning trades, and then there's just that one single trade that basically wipes away the entire day. Now, that was a slightly green day, but again, that was with a lot of green trades and one really big loss, which a lot of people are gonna look at and say, Clay, your risk management is terrible. Your risk reward is terrible. If you are taking on those big of losses when you're only making $50 in a trade, your risk versus reward is off. You have something that you need to work on, because that just doesn't make any sense, and those results prove it. All those green trades, yet you barely had a green day because of that one losing trade. I totally understand. But now let's go and look at some data that I've collected over the past few months as I've been doing this strategy exclusively as kind of an experiment, but that's besides the point. But point here being is there's a lot of data now that hopefully will bring some clarity to this understanding of risk reward. Now, real quick before I forget, this is TraderView, which is a logging software that allows you to transfer your data into it from your brokerage, and then that keeps track of all sorts of statistics and data. Fantastic platform. If you're interested in more, let me know in the comment section, and I'll link you to a coupon that they've actually given to anybody that subscribes. So like I said, if you want more information and want a 25% discount, let me know in the comment section. But anyways, so here is the data, and here's a calendar view, and we'll look at something here in just a second. But maybe right away you're noticing, okay, I see a lot of green here. I see a lot of winning days, not very many red days. And yeah, that's the first glimpse into the other side of risk management and risk versus reward. But with all that being said, I want to hop in and let's look at another part that's going to be a little bit better, I think, in illustrating all this. And that is right here. So real quick, the total number of trades, like I said, this is including a lot of data. Well, I suppose that would revolve around, do you think that 289 trades is a lot of trades? Maybe you don't, fair enough. In my mind, 289 trades, that's a lot of trades. And you can see up here that, yeah, average winning trade, as you would expect, right around that $50 mark at $51.30. Average losing trade though, $91.75. So again, looking at that from a risk versus reward standpoint, I totally get it. I mean, Clay, your losses are essentially double your winning trades. That's really, really bad risk versus reward. Again, totally understand, but let's just give me a chance here, a few more moments. However, maybe you already noticed the statistic, but if not, right here, number of winning trades and then number of losing trades. Losing trades, 50, which equates to 17.3% of the time I am wrong, which means, yeah, I'm averaging those bigger losing trades up there. However, I've been right 239 times, meaning I have a win rate of 82.7%. And when you equate that all out, you can see right here, and this is, I should note, this is after commissions and fees, but the total gain and loss, over $7,500. So my point here is always remember, bad risk versus reward, like you saw from those results, I fully concede that was bad, that looks bad. But the underlying dynamic here is, but if you have a high win rate, then that can overcome those days where you take those bigger losses. Think back to the calendars. I don't have that many red days. When I do have red days, sure, that they can be a little rough. There can be those situations. Now, this is one where that was still a green day, but it didn't quite go red. But yeah, red days could be bigger. And with this sort of strategy, they more times will be bigger. But if you do these sorts of strategies right, or if you're doing a strategy that's got a high win rate, just realize that the win rate can overcome that losing rate. With that being said, let's go back and I want to point out one very important detail and data point that you should be using in your strategy analysis. And that is this statistic right here, the number of losing trades. I have had 50 of them. I've had 50 losing trades. And I bring that up because if you're sitting here saying, well, my strategy doesn't lose, then we have one of two scenarios. Congratulations, you are officially the greatest trader in the history of mankind because your strategy never has losses. Or there's something wrong with your strategy and it's a matter of time before you get bit. And my guess would be you get bit really, really hard. So do you have losses? If you have losses, how are they affecting you? So yes, you could be at a high win rate strategy. Let's call it, and let's go really crazy. Let's call it 95% of the time you're winning. But when you have losses, what are those losses doing? Are they wiping away that entire 95%? Are they taking out a massive chunk? Because if so, then your risk reward is off. Your win rate is not high enough. So you got to keep that in mind. Just because you may have a high win rate doesn't mean that you're still going to have a profitable strategy. But the only way you can figure that out is, well, you got to experience some losses. You've got to take losing trades in order to figure out that part of the risk versus reward. But as you saw for me, I've been wrong 50 times since I started this strategy. 50 times, yet as you also saw, I was still overall green. So remember, results on the surface, yeah, it can look bad like you saw with that first one. But consider the win rate. Consider, have you had losing trades and how do those losing trades affect the overall strategy? So keep that in mind as far as risk versus reward is concerned. So yes, is this unique to the sniper shot strategy? I'm not going to say that. My core point here is that when you're building a strategy, just understand that there are a couple of ways that you can build it, whether it's you want to have just maybe a lower win rate, but you win a lot more than you lose, or like I'm doing, you do lose more than when you win, but you're just winning a whole lot more. But at the end of the day, the core data point, in order to figure out if either of those is valid, is have you had losing trades? And if so, how are those affecting your overall results? So I hope this helps. If there's any questions or anything like that, leave those down below. But yeah, get out there and figure out which sort of risk versus reward scenario works best for you and your risk strategy or your personal risk tolerance and strategy as a whole. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.